Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Viewing the top side of the Australian dollar, the level of 75.2535 remains very much mixed as the market continues to challenge this level and instead has posted many dojis, which is indecisiveness. In late of the pattern, though, we could see the market drop lower due to the RSI remaining somewhat negative to the recent rejection from that top side overbought region. Along with that, with the top side challenges failing, keeps an eye on this midway point. If we break beneath there, that should give further scope to the downside and reinstate the view back to 74.30. If we do break the level of 75.25.35, that would see a short impulse up towards 75.60, and from there we would need to reassess. The euro still maintaining its positive stance since a break of 111.15 and getting slightly carried away with itself. I feel the market bulls may end up in a bull trap. That is from the level around 111.7080 where we are currently contesting. If so, then we should see a sharp downturn. It's pretty typical to see this kind of pattern ahead of a very important number, being the non-farm payrolls this Friday. Although the market is feeling that the number may come in slightly lower, has put some pressure on the US dollar, which in turn has supported the euro. Let's see if we do reject this level around 70.80. If so, would look back towards the bottom side of the range around 109.30. The dollar yen very mixed after its recent rejection from the 7-year highs at 125, plummets for 2 days and now recaptures the 122 handle after respecting the level of 121.60. However, from the technical point, I believe this market is given an opportunity to maybe re-establish short positions, as I don't feel this pattern can stage a recovery beyond 122.70, 60-70 area, and therefore should see another downturn and challenge this level 121.60. The pound still holding to its gains as it pushes up towards 131.60 resistance. A break there should give further scope up towards 132 to 133, which is what I do favour because the technicals are firming up. The lackluster price action for sterling Kiwi still remains, and at present, though, I'm keeping an eye on this divergence. It's been here for some time and therefore should eventually see a snap to the upside where that rejection level of 190 and look up towards 192 as a potential target. The market's still somewhat mixed when it comes to gold after posting a hammer from the rejection of 1,900, but hasn't been able to sustain close towards that 1,940 area. I do feel as we do have weak technicals that we are going to see a move back towards 1,900 and reassess from there as 1,870 is beneath. It would seem the bears have come back to oil and now a close under 103 would give further scope towards the downside and look towards $97 a barrel or maybe even plummet lower towards 92 to 93. The reason behind that was there was little or hardly any follow through since this dragonfly doji, and with the bears coming back could reinforce the downside towards that bottom side at a range around 92 to 93. Well, that's a wrap for today. Thank you very much for joining me, but please keep an eye out for the interest rate report and I hope you enjoy the rest of the day.